Hello everyone, and hope you're doing well. This is Aruna, and we'll be with you with the global economic outlook in the week ahead, which is going to be the week 23 in 2025. As always, first let's check what we had as data in the previous week, and then we can check the week ahead and see what we can expect from financial market. Previous week, we had several factors which affected the market, especially inflation and PMI numbers. We know the inflation in some countries, like in Germany, we had 2.1%. In Japan, the inflation increased. The headline BOG inflation increased to 2.4% from 2.2%. We know that inflation in other countries slightly or like softer in Eurozone as well. In Eurozone economies, different economies like Spain, Italy, and French. But but the most important economic data of the previous week, it was the U.S. personal income and inflation, the personal income and spending numbers, which showed that the U.S. personal spending inflation slightly slower to 2.1%. It was a surprise from 2.3% that we had previous month in March. In April, the inflation slower to 2 to 1%. And a headline, that was a headline, and the core PC price index slower to 2.5%, down from 2.5%, 2.7%. At the same time, in the labor market, we know that the initial request for to use or to get the unemployment benefits also slightly increased around 240,000 applications in previous 2 weeks, which means that the labor market slightly getting weaker. We know that in a labor market, we know that sorry, in the labor market, we know that the exit from the jobs or the layouts is slightly increased in the previous weeks, which means that, okay, now the market says that the labor market somehow is getting weaker, but not that much. Like we can say that it's weaker. Most of the layoffs, it was about around the lower paid out jobs. So which means that now the lower paid out the jobs that they have less payouts, or not non-professionals jobs. We had a layoff out there, but most companies still they are holding their valued labors. PMI numbers all in other economies also we had some improvement in Eurozone PMIs, but still it is on in the lower than expansions area, which means that the Eurozone economy is still facing the problem. That's why we expect the Eurozone central bank to cut the rate by 25 basis points in the week ahead. Two central banks will have the policy meeting in Canada and Eurozone. As mentioned in Eurozone, before talking about the Thursday's ECB meeting, I have to mention that on Tuesday we will have the Eurozone inflation numbers for May. They're going to be the flash data. We expect to see inflation slightly slower to 2.1% from 2.2%. Headline inflation with the 1 or 0.2% monthly increase. That means that this Eurozone economy, considering the weaker inflation, slower inflation growth and weaker economic growth, that means that on Thursday meeting, we expect the European Central Bank to cut the rates by another 25 basis points, probably for the seventh consecutive meeting to 2%. That's not going to be the surprise, but that as the market expecting to see this 25 basis point rate cut based on the weaker economic growth. As mentioned, the Eurozone economic data is not much, the economic data are not so bright. On the other hand, in Canada, on Wednesday, we have a BOC meeting or Bank of Canada meeting. We expect the holding the current 75% interest rate as inflation. While the data shows that the inflation somehow is under control in Canada, but at the same time, slightly slower economic growth and and I mean the slower economic growth and inflation data support the rate cuts, but on the other hand, the risk of again the risk of inflation actually, or the increasing the inflation, they put the central bank in Canada under pressure to hold the current rate, as the tariffs between the United States and Canada has no clear outlook on what's going to happen between them. So that's why we expect to see the Bank of Canada to hold the current rate for more evidence for their next decision. So 2.75% interest rate is going to be unchanged. That's going to be in Canada. So, but in other countries, before talking about the US labor market, I have to mention in other countries, VKH is going to be the PMI numbers from most developing economies, with the manufacturing numbers on Tuesday, on Monday and Tuesday, and yeah, the manufacturing numbers going to be published on Monday and Tuesday from most European countries. We're going to have it on Tuesday. We expect to see manufacturing data in European economies still getting under pressure, under lower than the 50 expansions area, but maybe some slightly improvement, but still it's going to be in contraction territory under 50 under 50 area. But in China on Tuesday, we're going to have the PMI numbers, especially the stocks and manufacturing PMIs. We expect to see slightly improvement from 50.4 to 50.6. That's what we're gonna expect. That's what we expect to see in China. In the US also, we expect to see PMI numbers to increase slightly in both manufacturing and the service sector, as we had the previous weeks as well. But as mentioned, in United States, the main focus will be on the labor market data. As the labor market on Tuesday, we're going to have the GLTs. We expect to see the GLTs to slightly slower from 7,182,000 to under 7 million, which can confirm that the labor market's getting weaker and weaker in United States. But at the same time, as mentioned on the Friday's NFP numbers, market expecting to see the 4.2% unemployment rate to stay unchanged, and what we can see 130,000 newly created jobs. But there is a risk of this unemployment rate to increase from 4.2% to 4.3%. There are some risk about that, but the consensus and the overall expectation is to see that number don't be changed. But as we had the same tricks in personal income and spending data, we have to focus on the personal income, on the average incomes also. We know that the average yearly incomes that we expect to see to increase by 0.3% monthly and 3.7% annually. If that number changes, if that number slightly gets more than this, that can tell us that okay, now the inflation still should be in a focus. But generally, the labor market is getting weaker. That's more. I mean, that's so clear. Actually, that's what the central bank was actually looking for. That. Generally, the data we expect from United Kingdom in the week ahead, they are just like this. We can say the data, they're somehow positive before the labor market data, but the labor market data, they are so tricky. It's so hard to say that will we have the better than expected or not. To have the better than expected data, it's less likely actually to have the weaker numbers. If we have the weaker numbers, we're gonna have the pressure on the US dollar and better stock market. Generally, the data that right now we can say that the bad news is the good news right now, but the good news is the bad news for the stock markets. As the market reaction, US dollar expected to stay again unchanged, to move between 99 and 100 mark in the week ahead as well, continuing the same trend as that side movement with the uptrend tendency, slightly uptrend tendency, but moving between 99 and 101. This same reaction we expect to see in the gold market, the slightly side movement with the slight uptrend and tendency. That's what we can expect for the gold as well. So $3,300 slightly up or slightly down is what we can expect for the week ahead. About the energy market and oil, 62 between the 60 and 64 dollar is the market expectation. Same trend that we had previous week as well. So I mean the same expectations that we had the previous week to see the data unchanged with something between 60 and 64. So this is the same thing that we because geopolitical tensions, economic growth, all of them they are the elements that they can stay against each other and hold this range of the price for the oil. In the energy, that's what about the energy market and the stock market. As long as the S&P 500 trading around above $5,800,000, it means that the can go higher, and we can see that uptrend is continuing. But if anyhow the price fell under $5,800, which is likely, we can say that it's slight downtrend. But for now, the trend still is a side movement. I mean, even if we see the price is going higher, it's not going to be such a fast price movement. So side movement with slightly uptrend with bullish tendency, slight bullish tendency. This is what we can see right now in the market, as mentioned before. If I mean this different, but generally this is what we can see in the market. But if we have the negative news from the trade talks, that can change totally the market to the downtrend. On the cryptocurrency market, downtrend can continue. 102,000 is the next target. Breaching under 102,000 can put the 94,000 in the horizon. For now, we can say that the downtrend probably for the short term in the crypto market started. 87,000 probably is the target for the next 1 week or 10 days. But now, generally, we can say that it's in the downtrend, especially if the price stay breaching stronger under 102,000 US dollar. If the price reverse above 102,000 again after breaching this level, that can be say that okay, the downtrend, the bearish scenario can be cancelled and uptrend will be more likely. Yeah, that's what happened in the previous week and what we are expecting for the week ahead. If you had any other question, don't forget to write in the comment section. I will try to get back to you as soon as I can. Have a good time. Bye-bye.